Hello, everyone. I hope everyone is having a great weekend so far. Obviously, we're starting it off with this oil chart here. This is insane looking. There is no other way to as you can see, I'm kind of lost for words by looking at this chart. Trend followers, though, throughout the trend following universe have banked huge in November and are going to continue to bank in December because of this. This is an impressive decline. And as you can see here, oil just from the end of July has fallen by 40%. Something that I want to notice is DTO. DTO and SCO have been mainstays in my pre-perfect speculator and perfect speculator scan. And just look at the potential returns that could have been made here from 9:30 to 12:12. Obviously, these were not actionable signals on my end, but I tell you what, it's quite impressive to see what they have produced and to see what kind of gains we could have got if we would have taken the trend following future signal from CL, crude oil. So quite an impressive move. Now the good news is that I went long TMF. TMF is so far working since our long signal. TMF is now up 16% and continues to do very well. But when I see bond yields crashing the way that they are, and I see bonds rallying and oil doing what it's doing, here's the oil's ETR or ETN. It's just pretty gnarly out there. And I know a lot of people want to say that, hey, this is going to be great for consumers. They're going to go out there, spend money, buy more gas, drive around, buy more things, consume, take more than they give. But I just don't see it that way. There's Marty Zweig. One of the greatest books that I've read in the past year and a half is an old classic, that Marty Zweig book. And the three things he's always known to be bad for stocks is an extremely expensive stock market, which we kind of have, but with share buybacks and growing profit margins, et cetera, it might not be that expensive overall looking ahead. Then, of course, there's the successive hikes of interest rates. That's always going to be bad, and it's always led to a market downturn. And then the worst one's deflation. We only had that in the 1930s after the roaring 20s. So deflation, as you can see if you want to go study how the 1930s played out, is absolutely horrible. And I tell you what, when I go around and I just look at things like, the commodity index overall, it just doesn't seem that great. Now, the price decline isn't as rapid as 2008, but overall, there are things to worry about. And now let's get back to the indexes. Now, while the indexes hold up above the 50-day moving average and we operate on a neutral signal across the board, we have to look at the New York Stock Exchange and realize that it's already produced a sell signal, and it's now followed through on that sell signal on 1210 with another breakdown. So now this is working. Now, one thing that we're working on is whenever our price indexes, it's now worked a few times, and I back tested it to 1998, and I don't have the full figures yet on all the indexes, but I'm working on it. You see how the stochastics are starting to roll over from overbought levels here, but how the New York Stock Exchange holds up. This break right here on 1128 would be the first significant distribution. It's not technically a distribution day because the volume isn't higher, but here it is. So on 0.61, this is like the first day, for instance, you would start to hedge your long positions based on the way that the stochastics are acting with price. Now, you would have been wrong for a little bit, as you can see here, but now, oh, how right you would have been. But the one thing I want to point out here is that TSV and MACD, the stochastics aren't shown here. It's on the next one I'm going to show, heading straight down. There's no series of higher lows or higher highs, and they're both rapidly pointing down. The same for the S&P 500. They're still both pointing down, indicating that there's no internal positive divergence or momentum to the upside, and that's the case on every single index. There's the Dow Jones Industrial Average. Here's your NASDAQ. Here's your NASDAQ 100, and here's your Russell 2000. All indexes, oscillators, are still moving down with no higher highs. And then look at the Amex. Ugh, the Amex, super ugly. Same situation, no series of higher highs and higher lows. The most important oscillator I watch is the stochastics, as you can see here on the bottom of your screen. And as you can see here, it still is in a rapid price decline overall. No sign of turning up. It is reducing its speed down a little bit, but the Amex isn't showing any signs of bottoming. The New York Stock Exchange is still in a straight-on free fall, but it's getting nearer to the lows, so that is a positive. But I want to show you what happens sometimes Whenever this thing hit the low and started to trend up, what did the index do? It continued to crash down into new lows in October. But the positive is that MACD showed positive divergence. So when it turned back higher again, that was your basically, okay, it's safer to enter stocks here. But until those lines turn up, there's the NASDAQ, there's the Russell 2000, there's the NASDAQ 100, isn't that impressive looking? There's the Dow Jones Industrial Average. Until these oscillators turn up, there's no reason to think that we're done with the selling here. Now, if we're higher on Monday and the oscillators start to turn up, then sure, you can start to think that. But with the indexes making lower lows and lower highs right now and all oscillators turning down, to try to call a bottom here is absolutely foolish. I don't recommend it. Now, we do have some sell signals, but all of them triggered intraday, which is another sign of you're on the right side. CPHD, full sell signal, closing below the 50-day moving average on heavier volume. My final sell stop, which was near the open at the morning, hit, and that was it. We were out. PAM, my final sell stop was, I believe, below the low a day of the signal day, which was like 1044. Yep, 1044. As soon as it hit 1044, I was out, and as you can see, closed at 1035, so good job there. ENTA, same thing. ENTA, I had to get this. My final sell stop was below 44.40, and as you can see, closed at 43.23, so another good sell stop taken. And then the last full sell was MDVN, and so far it hasn't worked out. I placed the MDN final sell below the low a day of our first, I guess you could say, real update. The signal date was here, and then there's the good signal date, and then there's our add date. But the very first official signal date that proved that, you know, we might want to rally was here. I didn't take it, obviously, because of the below average volume. But that was the upturn. I mean, this is a stock that we're watching hardcore because it's not only in the perfect speculator scan and my CanSlim scan, but it's also in a high price stock scan. And when it shows up in the new high scan, too, and in the price volume scan whenever it surges. So this is obviously a hardcore stock on watch. So I made the low day 106.10. And as you can see, the 106.86 close is basically very near where we got stopped out, but it is a bit higher. So the rule is with MDVN, since it sells green bop and it was low volume, if it reverses higher and closes above 108.78, I will put that final sell stop back on. But as of now, it looks like, you know, it's preventing us from maybe potential larger losses if the market breaks down here. Also, MSTR was the only partial sell that wasn't, you know, a complete sell. You can go ahead and get out of it fully. If you use the low a day here of 161, which is where the sell stop was, you can see that we have failed. So MSTR was a 50% sell, and that's how I listed it. But to be honest with you, it's basically a full sell. What I'm going to do is I'll give it a chance to bounce here at the 50-day moving average. If there is no bounce at the 50-day moving average and it successfully closes below it on Monday or Tuesday or whatever, it will be fully gone. But for now, my final sell stop, the emergency sell stop, is still on the books below 155.10. So if it goes to 155.09 intraday, I'm out of MSTR. And besides that, there weren't that many great looking signals. CDW was a solid signal. BOP is completely doing the wrong thing, and it looks like following this day and that intraday reversal and these lower closes from higher opens and that intraday reversal, that this could be a fake out breakout signal. But if the market stabilizes and breaks out, CDW is one that we could put buy stops on just above the November highs here. So it is one to watch, but it's one of only a few stocks that flagged. IDTI was another one. As you can see, it's not breaking out of a great base. It's more of a continuation pocket pivot point signal. Volume was just above average. BOP is trending in the wrong direction, so once again, not a great one there. And my favorite one tonight overall was FLXN. I see strong mutual fund growth, and there's got to be a reason that mutual fund ownership is increasing, but earnings and sales still isn't there. It's probably going to be more of a buy, target of a buyout, merger, whatever you want to call it, acquisition. But Flexion Therapeutics, love the surge in volume and BOP today, and price, boom, 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 boom. Why am I not taking it long? Duh, the tape, come on. And also it's up 9% in one day, and it's not like it's breaking out above even the most recent resistance. So to see a move like this, for a move like this to become buyable, the base would have had to have been way more symmetrical, which means it would have needed to go on at least 5 to 10 sessions sideways or slightly rounding higher, and then we would have, with green bop the entire time, and then we could have gotten this bop volume price surge, then it would have been viable. But as of now, there are no new signals for Monday, just some loss cutting, and we're very, very neutral here. We did not take hedges this time around because all the other hedges, besides the ones that I took in September, October, which only barely worked because of the snapback rally at the end of October without any real signs of really bottoming. It did look like that it was a potential bottom in October, but still, I didn't think it was going to be such a V-shaped rally, which really took care of a lot of those profit targets. And after reviewing the stochastics, it becomes apparent that we need to use those in conjunction with our hedges. So this time around, I decided to go into study mode, and we're going to stay away from the hedges. It has proved to be not that costly, but once again, if we go back to the NASDAQ and we use that same thing, we can see here the stochastics start to roll over below its moving average, but the index still trends higher. And as long as it's trending higher, it's fine. But right there's our first distribution day. Stochastics is completely rolled over. And like I said, once again, we're wrong for a little bit. And for 4 days, we take a 1% loss in the index. But now it has been working. But if we wouldn't have been focused on the NYSE, we would only have a 3% gain in our hedges. So it's not like, it's anything amazing. I mean, even from here from the SQQ, you're only up 9%. But great learning example right now. Everything appears to be good for us. Raise your stops on anything that was down on Friday that you own. I recommend giving a good look over and raising your stops. For instance, Payc could have been another 25% sell, but because I got rid of it yesterday, this was not technically a 25% sell. Once it closed below those lows, which was 25.76, then or the 25.25, that's what I thought. Okay, 25.25, then it became a sell. Obviously, it opened up at 25.19. My sell stops then triggered, getting me out at like 25.09, and we continue to sell off today on below average volume. So now the next thing is, once again, 23.80 is the low day of this signal, so you don't have to sell 25% now. You sell 25% with a sell stop breach of 23.80. If it doesn't breach 23.80 and rallies higher, then you don't get shaken out of this position. If it doesn't then rally higher, you just put the position back on. But I tell you what, these sell stops have saved our ass as these distribution days mount up in the market. Have a great rest of your weekend and great upcoming week.